The House of Tax Policy Committee will come to order. Would the clerk please take attendance?
Chair Neely,
Here.
Representatives Farhat,
Here.
Rixey,
Here.
Carter,
Here.
Witset,
Here.
Grant,
Present.
Price,
Here.
Van Workum,
Here.
Markkinen, Outman,
Here.
Tisdale,
Here.
Hoadley. Madam Chair, you have a quorum.
Thank you. Vice Chair Farhat makes a motion to adopt the minutes from March 8, 2023 meeting. Without any objections, the meeting minutes are adopted. For today's agenda, we will have introduction, testimony, and votes from the following. And you guys can come up to the table, Rep. Altman, Rep. Van Workum, Rep. Thompson, and Rep. Coleman. Yes, you may start.
Well, thank you, Madam Chair and fellow committee members. Before you is a piece of legislation that Representative Coleman and I have worked on for a few years now. It's a relatively straightforward bill with sort of a complicated background. So first I'll explain what the bill does, and then I'll go into why we're at the place we're at and why this bill is necessary. So this legislation exempts the delivery and installation of goods from the state sales tax, sales and use tax, if they are separated on an invoice or bill of sale document. However, as we learned from the presentation from Treasury last week, Michigan does tax some selective services, such as telecommunications, hotel accommodations, things like that. The problem is that there's been some confusion about when to apply tax to the service of delivery and installation on a taxable good, and it's kind of resulted in a mess for the business community. So to clarify the problem, Treasury issued Revenue Administration Bulletin RAB 2015-172 in attempt to clarify if and when sales and use taxes apply on delivery and installation. However, despite explanations from the Department of Treasury, delivery and installation are regarded as services, which causes confusion for many retailers who do not understand how to apply sales and use tax on those services accurately. So now we're at the point where we should just go ahead and clarify statutorily that if you have delivery and installation separated at the time of sale, the taxes will not be applied. Additionally, HB 4137 is included in this package to update the reference in the Reporting Tax Information Act to match the change made in HB 4253. And most people agree, and that's why there's been so much engagement from all the various stakeholders, including Treasury. I want to thank their team as well for being such a great resource. But again, it's been an all hands-on-deck approach. And at this time, I want to, again, thank you, Chair Neely, for the opportunity to speak on my bill, and I'll kick it over to Representative Coleman.
Well, good afternoon, Chair Neely. Thanks for having us, and Vice Chair Farhat and Minority Vice Chair Van Workum and members of the committee. It's good to be here today to tell you about some of the bipartisan legislation we've been working on. As Representative Altman stated, this is something that we introduced last year, and we had hearings on them, and we're giving it another go here. And I would just say the easiest way to describe this legislation is when you walk into an appliance or furniture store right now, if you ring up everything together, the purchase and then the installation and delivery, it's taxed. If you were to buy your couch or refrigerator or whatever separately, buy it, that's taxed. Walk out, walk right back in, say, hey, you know what? I want to get this delivered and installed. Then there's no tax on that. So there's a lot of confusion for the businesses that and the consumers that are dealing with this issue. And this is just to make this more simple. It's to give consumers a break. You know, we have the appetite in the legislature right now to cut some taxes. So we're going to try to give that a go here. And I do want to point out something very important. These bills, and again, you know, I actually should have said the bill number for my bill is House Bill 4253, which specifically covers the use taxes and says that they would not be imposed on delivery, installation, or similar charges if those charges were separately stated on the invoice, bill of sale, or similar document provided to the purchaser and the seller. And So that's my bill specifically. Representative Outman covered his bill, but I do want to say, and this is an important piece, these bills would hold the state school aid fund harmless from any reduction by requiring a person who excludes delivery, installation, or similar charges from the sales price or purchase price of tangible personal property under the bill to report the amount of delivery, installation, and similar charges and other applicable information to the Department of Treasury, and requiring Treasury to reimburse the school aid fund for any revenue lost. So I hope that covers what we're working on. If you have any questions, happy to entertain.
Okay, thank you, guys. What I'm going to do is allow the chambers to come up and do some testimony, and then I'll bring you guys back if we have any questions for you. Okay, thank you. So here to testify on HB 4039, 4137, 4253 is Lynn Robinson, Director of Legislative Affairs and Leadership Program. Michigan of Chambers Commerce, Jamie Larson. Michigan of Chambers Commerce Tax Policy Committee, Nate Haskell. Am I saying it right? Or forgive me if I'm saying it wrong. Okay. And Department of Governor's Affairs from Grand Rapids Chamber of Commerce, Dave, and help me say your last name. Ackelbarger. You guys may go ahead.
Good afternoon, Madam Chair and Tax Policy Committee members. My name is Leah Robinson. I'm the Director of Legislative Affairs and Leadership Programming for the Michigan Chamber of Commerce. With me is Jamie Larson. She is our Internal Tax Policy and Economic Competitiveness Committee Chair. She is an expert in corporate tax as well as state and local tax. We appreciate your willingness to allow us to testify in support of 4039 and 4253. And thank you to Representatives Outman and Coleman. Thank you for not only working this term but last term and bringing this issue to the forefront. And I would also like to thank the Department of Treasury. They've been great partners with us, making sure that this language is where it needs to be. The Michigan Chamber of Commerce represents approximately 5,000 member organizations from all 83 counties, and our Internal Tax Policy Committee is comprised of approximately 215 individuals, ranging from tax managers and attorneys, CPAs, site consultants, as well as association leaders. Our Tax Policy Committee focuses on policies that support a fair and stable economic climate and provides opportunities to the business community to really invest in their employees and communities rather than fighting unnecessary hurdles and red tape. With that, we are here today in support of the proposed delivery and installation package. This legislation is incredibly important to our members as they want to make sure they're following the law and accurately reporting information, which is why this clarification is necessary. So I'm going to kick it over to Nate Henschel to allow some background on the issue.
Thanks, Leah. And Madam Chair, members of the committee, thank you for this opportunity to share the Grand Rapids Chamber's support for House Bills 4039 and 4253. The Chamber's legislative priorities on tax policy can be described as efficient, simple, and transparent. Our legislative priorities specifically oppose any expansion of tax and services. This legislation exempts installation charges and delivery fees when itemized separately on invoices and bills from sales and use tax. To our members, this is a no-brainer. As we continue to navigate the pandemic recovery, we must ensure a thriving business community. Doing what we can as a state to ensure Michigan remains a place where businesses want to locate, remain, and grow should be of the utmost importance to the legislature. This legislation is about competitiveness, fairness, and about transparency. Thank you to Representative Outman and Representative Coleman for their leadership on this important issue to the business community. And I'd also like to thank the Department of Treasury for their work and guidance to make sure that we did this the right way as well. With that, I will turn it over to Dave Eckelbarger, Managing Partner of EHTC and the Grand Rapids Chamber's Tax and Regulatory Affairs Committee Chairman, to share a few words on the bills.
Excellent, and thank you. A couple of things that this bill does. First of all, it provides clarity in the interpretation of how delivery and installation charges would or would not be taxed. There's been many years of flip-flop, as I guess I've looked back through documentation and records, and just putting a point in the sand, saying time to get clarity, and consistency in application. Right now, again, Treasury, we've seen situations where they're interpreting the current REB as mentioned earlier, and how does how does the taxpayer then collect and sales tax or a taxpayer issue use tax? And if we don't have that clarity, businesses are going along thinking they're doing business correctly, and then Treasury comes in and interprets this REB differently, and all of a sudden now we have a taxpayer with hundreds of thousands of dollars of tax bills. Not that they didn't collect it, they didn't anticipate that they were supposed to collect it, and all of a sudden here they have a huge tax bill. That's not the type of clarity businesses need. They need that clarity to move forward. And I think ultimately, with that clarity, Treasury now knows, how to apply what we desire as a legislative group. What is the law? How do we apply that? And so, as mentioned, Treasury is working very closely, and they now know how to apply. So we're excited about this legislation, and as a consultant to businesses, to be able to say to these businesses, here's what's right and what's wrong, not everybody be in this gray area and wonder, did we do it right or not? And what happens when Treasury comes in, will you have a bill or not? So appreciate that.
We'd be happy to answer any questions you guys may have.
Okay, thank you. Do we have any questions? Rep. Carter?
Thank you, Madam Chair, and thank you all for your testimony. I was extremely impressed to know that these bills would not impact the school aid fund. But can either of you explain to me what would be the overall impact on the general fund?
I think last term Treasury calculated this as $60 million to the general fund. Okay, perfect.
Follow-up question, Madam Chair.
One moment. I'm going to ask Treasury to come take the table, and they can answer
thank
that
you.
for you. Thank you.
Hi there, committee. Yeah, my name's Rob Mast, Department of Treasury Liaison. The impact to the general fund is roughly $70 million per year moving forward.
Okay. Thank you, Madam Chair. Follow-up question, please. Are there any departments that would be specifically impacted by this?
No, Representative. This would be a reduction in revenues, so it's not a cut to any particular budget. It would just be accounted for on the balance sheet.
Thank you.
Rep. Price?
My question was answered. Thank you.
Rep. Britsky?
Thank you, Madam Chair. While I appreciate the testimony, I want you to stay here. Sorry. While I appreciate the testimony about the, the interest in having the supply chain relief, et cetera, one of the things I'd like to ask Treasury is $70 million is the estimated impact to the general fund. Have we ever held local governments harmless? Like, I always hear that we're holding the school aid fund harmless, and while I'm happy to do that, what that means is that impact is going to be greater on the remaining parts of the pie of the budget that those tax revenues go to, correct?
Yeah. The general fund, yeah.
That's where I was going.
Okay, so, thank you. So we've been hearing this talk about, I know it hasn't been determined yet if the trigger is going to happen. We have to do all the work involved to get our books wrapped up for the end of the year. But I've heard that the trigger is going to be potentially a $700 million reduction to general fund, correct?
I'm not particularly well-versed on that issue.
Okay.
I understand HFA and SFA, as part of the principles did project, do some initial projections. However, till the books are finally
Right.
closed, there's
So just using that as an example of something potentially that could be a number, this 70 million is a tenth of that loss, another tenth of what sounds like a huge number. So I have some pretty big concerns about this. I want to ask you about the delivery. Who is the primary beneficiary of these? Is it big box stores, or who is going to benefit from this change?
From this additional exemption,
Yeah.
while companies are the taxpayer, this is a tax that is almost exclusively passed on to consumers. I mean, it's listed in front on your receipt of the sales tax, and companies are allowed to reimburse themselves by passing it on to consumers. So, it'll depend on the particular good and market forces, elasticity of and
If
the
you-
market competition, and
If
whether
you've calculated that it's $70 million, what type of companies are currently generating this revenue?
Yeah, a lot of the primary goods that get swept up into this are furniture. You have your room redesign or office redesign materials, like if you redo a kitchen or a bathroom, all of that would be installed or provided by the and would be typical under current law would be taxed as it's installed when you're purchasing the
So the
product.
vast majority of the receipts are coming from kitchen redesign, not from like Lowe's and Walmart. I personally, I'm just thinking about what I've had delivered, and I don't always have furniture delivered. I often pick that up myself, but I've had every dishwasher and stove and refrigerator, sadly, that I've had to purchase 3 different refrigerators in the time that I have lived in my home here in Michigan. I've had all of those delivered. So where are these?
Well, there's a lot of taxpayer businesses who sell high volume but low, receipts. But conversely, there's some really rather expensive items that also get, and so I don't know the exact breakdown of how that all
Okay.
pans out. But those are the 2 large buckets that we're looking at when you're talking about delivery and installation of goods.
Okay. Thank you. Would you like us, Madam Chair, to hold our comments on the overall bills until before we vote and just use this time for questions?
You can go ahead and do your overall comment right now.
Are we going to take them all up individually?
These 2, yeah. You just want to wait to the end? We can wait to the end.
Yeah,
I can
I'll wait
let you
till the
explain.
end.
Thank you, Rep. Britsky. Now we have some substitute language for the building. Substitute provided prior is H Bill 4039 and 4253. Rep. Almond, would you like to speak?
Yes, just real briefly. So H1 for 4039, this substitute specifies that the exemption from delivery and installation on sales tax does not apply to utilities. Additionally, the sub states that within 90 days of the bill's effective date, that Department of Treasury would cancel all outstanding balances related to delivery and installation charges on intent to assess and charges on final assessments. Finally, the sub requires Department of Treasury from issuing any new assessments for sales tax on delivery and installation for any tax period before the effective date of this bill. And the H1 for 4253, Rep. Coleman's bill, does the exact same, but for the use tax.
Thank you. And Rep. Van Winkle, would you like to speak to your substitute?
Is this the 4137? Substitute for 4137 is very simple. It just substitute changes the tie bar from House Bill 4040 to House Bill 4253.
Thank you. Rep. Alderman makes a motion to adopt substitute 4039. Mr. Clerk, please call the roll.
Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
Yes.
Carter,
Yes.
Witsett,
Yes.
Grant,
Yes.
Price,
No.
Van Workum,
Yes.
Markinen, Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 10 yeas, 1 nay, 0 pass. The substitute is adopted.
Thank you. Representative Van Welcome makes a motion to adopt the substitute bill 4137. Mr. Clerk, please take vote.
On the motion to adopt the substitute, Chair Neely,
Yes.
Representatives Farhat,
Yes.
Rixey,
Yes.
Carter,
Yes.
Witsett,
Yes.
Grant,
Yeah.
Price,
No.
Van Workum,
Yes.
Markinen, Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 10 yeas, 1 nay, 0 pass. The substitute is adopted.
Thank you. Rep. Outman makes a motion to report House Bill 4039 as substitute with recommendation. Mr. Clerk, please call the vote.
Madam Chair, I had asked for the opportunity to address the bills in there with my comments. And can I have the opportunity to do that since the bill is before us?
Yes, and please accept my apologies.
That's okay. We're all new at this. And, okay, so for the delivery and installation tax exemptions, this dollar amount is really pretty staggering to me, $70 million. And, you know, as I think about the beneficiary, I, like many of my colleagues, care so much about school aid fund that we've found sometimes an easier way to get tax cuts passed is to say, well, we're not going to take any of it out of the school aid fund. So then what that means is that we're going to take it out of everybody else even more than what would have been taken out. $70 million is a lot of money. Our local governments are continuing to struggle because of the tax policies that we have surrounding Proposal A and the inability for communities to recover and any kind of taxing entity that relies on property taxes from the economic downturn and the loss of property values that we've seen all across the state. So local communities are pretty much still receiving revenue sharing amounts that are less than what they were 20, 25 years ago. And despite the fact that Michigan had a great, robust economic recovery after COVID, local communities are still struggling. And I think the idea that the taxpayers are the ones that are getting the benefit of this delivery and installation tax exemption, we did hear that there were some pretty expensive items, and I think of furniture. Okay, so who are we helping? Are we helping folks that need help, that are having a really hard time struggling to make it, to get by day to day, those Alice families that we talk about? When my family was young and we were kind of scraping by, we weren't buying new furniture. We were buying furniture, out of garage sales or estate sales. Now you have Facebook Marketplace, and picking it up ourselves. So to me, this is really having a very positive impact on folks at the higher earning income brackets who are buying new, and the more expensive thing you buy, the better of relief you're going to get with your tax relief here. Additionally, it's coming from a sector of retail, the big box sector, that has done incredibly well during the pandemic. And who's suffering? Well, meanwhile, as we're building our budgets and we're getting our targets, we're being told that we have to reduce our budgets because of potential pretty significant reductions in tax revenues that may be coming down the pike when we get our books wrapped up for the year. So, knowing that in good conscience, I cannot support something that is going to have such a dramatic impact on our state revenues. One of the things that we're in need of doing is increasing things for those communities that have been devastatingly impacted by COVID and by the economic downturns that we've had over the last decade and a half. And this is doing nothing to help hardworking families get ahead. So I'm going to be a no on this bill.
Thank you, Rep. Brissy. Any other questions or comments? Rep. Van Welcome.
Thank you, Madam Chair. Thank you for all those that have worked on this bipartisan bill. This has been something that's long-term coming. As we heard testimony, it's about clarification. We've heard that it has been taxed, it hasn't been taxed. And frankly, the state has a long set precedent of not taxing services for the state. When the state is running surpluses of $1 billion and we have $9 billion on the books, when people are trying to get and are dealing with inflation daily, and when their refrigerator goes out or they want to buy new equipment, this helps. And because they didn't go in later to ask for delivery done, but actually paid up front, this helps those. So thank you for everyone that's done this in a bipartisan manner. We do want to make sure that families have any relief. The state is flush with cash. If you saw what was happening in the Appropriations Committee earlier, they're trying to find new and innovative ways to spend that cash. So the fact that we are letting families keep more of their hard-earned money in their pocket and reducing this tax, which ends up getting put onto taxpayers and people right away. This isn't a business tax. All it does is get pushed to the final consumer of who has to pay for this. So thanks for providing this tax relief, and I look forward for this passing. Thank you.
Thank you. Representative Woodsett.
Hi, I want to thank you for the presentation. Thank you, Madam Chair. I think for a lot of people, this doesn't seem like a big deal because you think of the big box stores. But from my neighborhood and from my community and these small business owners and people who use the rent-to-owns and things of that nature, every little dime counts. And so this is huge for them when you think about those who have to use those services. They don't have the option to pick these things up. And they need whatever help that they can possibly get. So thank you. I appreciate it.
Thank you. Now, Representative Ottman makes a motion to report HB 4039 out as a substitute with recommendation. Mr. Clerk, please take the vote.
On the motion to report, Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
No.
Carter,
Excuse me, I'm so sorry.
on the motion to report,
No.
Witsett,
Yes.
Grant,
Yes.
Price,
No.
Van Workum,
Yes.
Markkinen, Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 8 yeas, 3 nays, 0 pass. HB 4039, support recommendation, substitute H1.
Representative Van Walkman makes a motion to report HB 4137 as a substitute with recommendation. Mr. Clerk, please take the vote.
Motion to report, Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
No.
Carter,
No.
Witsett,
Yes.
Grant,
Yes.
Price,
No.
Van Workum,
Yes.
Markkinen, Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 8 yeas, 3 nays, 0 pass. HB 4137's report recommendation, substitute H1.
Thank you. Representative Ottman making a motion to adopt substitute HB 4253. Mr. Clerk, please call the vote.
On the motion to adopt the substitute, Chair Neely.
Yes.
Representatives Farhat.
Yes.
Brixey.
Wait, which one?
the
substitute
for 4253.
Substitute, yes.
Carter.
Yes.
Witset.
Yes.
Grant.
Yes.
Price.
Yes.
Van Workum.
Yes.
Markkinen, Outman.
Yes.
Tisdale.
Yes.
Hoadley.
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 pass. The substitute is adopted.
Thank you. Representative Ottman makes a motion to report House Bill 4253 as a substitute with recommendation. Mr. Clerk, please call the vote.
On the motion to report, Chair Neely.
Yes.
Representatives Farhat.
Yes.
Brixey.
No.
Carter.
Yes.
Witset.
Yes.
Grant.
Yes.
Price.
No.
Van Workum.
Yes.
Markkinen, Outman.
Yes.
Tisdale.
Yes.
Hoadley.
Yes.
Madam Chair, you have 9 yeas, 2 nays, 0 pass. HB 4253 support the recommendation, substitute H1.
Thank you. And we would like to thank you, all you guys, for coming up and testifying for us today. We really appreciate you taking the time out of your business schedule to come and speak with us today. Thank you, and I hope you have a wonderful day. You're welcome. Now we would take up House Bill 4054 from Rep. Van Winkle and House Bill 4055 from Rep. Thompson. And we also would have Lynn Gandhi come up and also sit at the table to testify. Thank you.
Good afternoon. Thank you, Madam Chair, for allowing me to speak to this, and thank you, everyone who is in attendance today. I am Representative Thompson. Michigan law provides for an exemption from sales and use tax on machinery and equipment that is used in industrial processing, including the repair and maintenance of such parts. When concrete or asphalt road is removed from service, it is often recycled and reused in future construction projects. However, to reuse the concrete or asphalt, it must be crushed and processed into smaller pieces. The equipment required to process this material performs an industrial processing activity and includes loaders, feeders, crushers, screens, conveyors, and control equipment and generators. Now, historically, aggregate producers that recycle this material have provided equipment dealers with an exemption certificate indicating that the equipment will be used for industrial processing and therefore is exempt from sales tax under the industrial processing exemption. However, recent audit activity has disputed the application of the industrial processing exemption to the equipment based upon where the aggregates are used, regardless that the aggregate producers pay use tax on this product. House Bill 4054 and 4055 would set clear and consistent regulatory standards which ensure the recycling of asphalt or concrete is considered an industrial processing activity regardless of where the final product ends up. As such, any equipment used for this activity would be classified as industrial processing equipment regardless of a sales or use tax that is ultimately paid on the finished product. I thank you very much for your consideration, and I will turn it over to Representative Van Workum.
Thank you, Representative. Thank you, Madam Chair, for bringing this important legislation up. I guess I'm going to try and simplify this as much as possible. For our aggregate community, you heard the loaders, the crushers, the trucks, everything that is exempt from sales tax when they purchase that. And through some interpretations along the way with Treasury, it's kind of come into question of it based on if a road is kind of graveled up right there and reused and recycled, that would be under the use tax. So the local government would be paying the use tax for that material. If that material actually gets put in, say, a yard and eventually makes its way towards retail, then there's a potential of paying that sales tax, and that would question that equipment, whether it's now exempt from sales tax. These guys don't know where it's going. They're just doing the process, the industrial process to make this happen. So they really don't have a way of knowing whether it's going towards retail and then therefore the sales tax, or going to local roads and therefore the use tax. So we want to make sure there's just clarification. The state's going to get paid no matter what, whether it's on the use tax or the sales tax. But we want to make sure that that equipment, again, remains exempts from the sales tax. So that, and I think we have much bipartisan agreement that we want to make sure our roads are repaved and constructed, and this will help ultimately down the line with some cost efficiency with that. So thank you, Madam Chair.
Thank you, Madam Chair, Chairman Neely, Vice Chairs Farrett and Van Wokum, and esteemed committee members. It is my pleasure to be here today to participate in our democratic form of government. My name is Lynn Gandhi, and I'm a partner in the Detroit office of Foley and Lardner, where my practice is exclusively focused on matters of state and local taxation. I also teach state and local tax at Wayne State University Law School, speak frequently on state tax topics, and I'm a fellow of the American College of Tax Counsel. I come before you today on behalf of the Michigan Aggregates Association to support House Bills 4054 and 4055, which would correct a disconnect between the Sales and Use Tax Acts. Michigan, like many other states, provides an exemption from sales and use tax for equipment used in manufacturing operations. The tax policy behind such exemption is the avoidance of tax pyramiding. The taxation of business inputs, such as equipment, used to produce a taxable product, such as asphalt and aggregate, will be taxed at the end sale, the sale to the final consumer. Sound tax policy levies sales or use tax only on the use of the goods on the final consumer. This policy fosters manufacturing activities in our state and is duplicated by all our neighboring states. This bill arose from the denial of the industrial processing exemption for the equipment used to manufacture the aggregate. There's no dispute between Treasury and the taxpayer that the equipment is used in a proper manufacturing process. Rather, disputes have arisen during audits on how much of the exemption would be permitted based on where the product is sold. So normally when if Ford Motor Company were to buy a big pressing machine, they get an exemption of industrial processing for that piece of equipment. The auditors don't ask, well, where were the cars sold that this piece of equipment produced? Because there's no way when you buy the piece of equipment that you know where the final product is being sold. The disconnect comes in because there's an interpretation that if the product is being installed in another state, i.e. the contractor is building a road in Ohio, the aggregate would, the sales tax on the machinery and equipment would be 100%. But if the aggregate was being laid in Michigan, and instead of a sales tax, the contractor pays use tax, then the exemption would not be 100%. And that's a disconnect because sales and use tax is at the same rate, on the same base, and as long as the state gets 6% on either the sale of the product or the use of the product, the exemption should be 100% on the equipment. And what makes it difficult upon audit is asking someone who bought a piece of equipment 2 years ago. They provided the vendor of the equipment a manufacturing industrial processing exemption certificate. Now, the question the auditor asks is the product produced by that machine prove to me where it was used. So there's some crystal balling, there's back records. When an aggregate producer sells aggregate to a customer, he might not know, well, did some of it stay in Michigan? If it was Walmart, did Walmart use some in Michigan and then later use some in Ohio? And how I, as just the aggregate manufacturer, have to figure out when my customers, what they're doing with this product years after I've sold it in order to substantiate my 100% exemption on the equipment. So we want to simplify that. The equipment's doing an industrial process. We know the state will either get sales tax if it's sold in the state or use tax if the contractor lays it on a road project in the state. Just to clarify a little bit, the representative, the municipalities don't pay the use tax. It's the contractors. It's the small businesses working on a large road project. They are liable for that use tax and they pay it. Payment by the contractors is not in dispute here. It's really about how difficult is it to prove up your eligibility when you purchase your equipment when the audit is years later. I know of no other state where the exemption for industrial processing equipment is dependent upon whether a sales or use tax is paid on the product produced. Generally, as long as the equipment is used in an exempt activity, the exemption is permitted. I'm happy to answer any questions you may have.
Do we have any questions? Rep. Carter?
Thank you, Madam Chair, and thank you for your presentation. My question was similar to the last presenters. Do these bills affect the school aid fund in any way?
I don't, well, to the extent that sales and use tax would contribute to the school aid fund, you would expect it to be yes. But these bills should not. If you look at the revenue estimate, it's less than $1 million because the contractors are paying use tax. That's going into the school aid fund. Or they sell it and pay sales tax. That goes into the school aid fund. Really, we're talking about sales tax on the exempt equipment itself, and it's so small, really hard to say what percentage would ultimately impact the school aid fund.
Rep. Britsky?
Thank you, Madam Chair. Last year in committee, I know that you made presentations, and I know that there's been a number of iterations and subs. So is there a retroactivity piece to this, or is it only this calendar year moving forward that, or I guess it would have to be whenever immediate effect happens?
Right. I think the intent had been that the bill is really meant to clarify, because we're talking about an audit inquiry that occurs after the effect of the exemption already being claimed, because that would be more clarifying in nature. That would impact any outstanding or open audits or assessments. But again, I believe that Treasury's estimate here would incorporate any and all open, potential impact.
I don't think my question is for you. Can I have Treasury come up? I mean, we are amending the Tax Act, so we're not amending accounting principles. Can you clarify for me if there's retroactivity to this piece regarding assessments or?
Yeah, so similar to the delivery and installation bills, there's language that would allow for the cancellation of assessments, final assessments, or notices of intents to assess for outstanding balances as it relates to these particular exemptions.
Okay, so how retroactive does that mean? The beginning of this year? The
So-
assessments went out on December 31st.
No, sorry. An assessment in this context is essentially what occurs after an audit. And so in this situation, a business who was audited and impacted by this exemption, or would then qualify for this exemption, would have their outstanding balances for those open assessments canceled.
So it is retroactive for people who have been audited who have not paid it.
Correct,
Okay.
to a degree. It's
Okay.
not I wouldn't term it as retroactive, but it does impact those who have been audited.
Okay, so let me ask you another question. The 30, 60, or 90 days, when does that clock begin?
Whenever the bill takes effect.
Okay, so if this bill, like so many others, doesn't receive immediate effect, then would it take effect in January of next year, or would it be at the end of our legislative session in January of 2024?
So it would be 91 days after sign die, whatever that would be, if it doesn't receive immediate effect.
So that would be January of 2024, Thomas?
Well,
Yes.
it's not a specific date. It would be 91
Right,
days after
right,
sign
right,
die.
right,
So
after sign die.
if, if the legislature went to sign die in tomorrow, it would be 91 days from tomorrow. If they went to sign die on
Okay.
the 31st, yeah,
Thanks.
absolutely.
All right. We have one more question. Rep. Grant?
I just have a question around, do we know what that balance is for the outstanding assessments?
So we don't have that exact figure. Treasury estimates this legislation to reduce revenues by roughly $300,000 for fiscal year '23. It's a very negligible portion of that total, that amount.
All right. We'd like to thank you guys for the testimony. We appreciate you. We have one more testimony. We're going to ask Jennifer Smith. She's representing Michigan Association of School Board. Welcome to Tax Policy.
Happily, it's been a while. Thank you, Madam Chair, for giving me the opportunity to explain our position on this bill. My name is Jennifer Smith, and I'm Director of Government Relations for the Michigan Association of School Boards. We are opposed to this bill as written, and not because of the policy necessarily, but because there is a hit to the school aid fund. We really appreciate all the work that has been done over the last few years to protect the school aid fund from some of these cuts, as 73% of sales tax funds our schools, and it is the largest funder of our schools with the sales tax. So every time even a small amount is cut, that affects the amount that is in the school aid fund available to our schools. So I wanted to be able to explain that position to you, that again, it's not necessarily the policy. We believe and have believed for years that we should be having a wholesale look at our tax structure, what we tax and how we tax and where those taxes go to. So I appreciate your time to be able to explain that, and I'm happy to take any questions.
Do we have any questions? All right, seeing there's no question, thank you. Now we have substitute for Bill 4054 and 4055. Rep. Van Winkle, would you like to speak to those substitutes?
Thank you, Madam Chair. House Bill 4054 substitute. The sub changes 30 days to 90 days when Treasury must cancel out outstanding balances related to the industrial processing exemption for changes on intent to assess and charges on final assessments. Do you want me to do the second one as well? Yes. And then the sub for 5055 does similar, changes 30 days to 90 days when Treasury must cancel all outstanding balances related to the industrial processing exemption for changes on intent to assess and changes on final assessments.
Thank you. Now we will have Representative Van Winkle make a motion to report HB, oh, sorry. We would go at ease from the chair. call tax policy back to order. Representative Van Welcome makes a motion to adopt substitute HB 4054. Mr. Clerk, please take the vote.
On the motion to adopt the substitute, Chair Neely?
Yes.
Representatives Farhat?
Yes.
Brixey?
Yes.
Carter?
Yes.
Witset?
Yes.
Grant?
Yes.
Price?
Yes.
Van Workum?
Yes.
Markinen? Outman?
Yes.
Tisdale?
Yes.
Hoadley?
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 passed. The substitute is adopted.
Representative Van Welcome making a motion to report HB 4054 as substitute with recommendation. Mr. Clerk, please take the vote.
On the motion to report, Chair Neely?
Yes.
Representatives Farhat?
Yes.
Brixey?
Pass.
Carter?
Yes.
Witset?
Yes.
Grant?
Yes.
Price?
No.
Van Workum?
Yes.
Markinen? Outman?
Yes.
Tisdale?
Yes.
Hoadley?
Yes.
Madam Chair, you have 9 yeas, 1 nay, 1 pass. HB 4054 supports the recommendation, substitute H1.
Representative Van Welcome makes a motion to adopt substitute HB 4056. Mr. Clerk, please call the vote.
On the motion to adopt the substitute to 4055, Chair Neely?
Yes.
Representatives Farhat?
Yes.
Brixey?
Yes.
Carter?
Yes.
Witset?
Yes.
Grant?
Yes.
Price?
No.
Van Workum?
Yes.
Markinen? Outman?
Yes.
Tisdale?
Yes.
Hoadley?
Yes.
Madam Chair, you have 10 yeas, 1 nay, 0 pass. The substitute is adopted.
Representative Van Welcome makes a motion to report HB 4055 as substitute with recommendation. Mr. Clerk, please call the vote.
On the motion to report, Chair Neely?
Yes.
Representatives Farhat?
Yes.
Brixey?
Pass.
Carter?
Yes.
Witset?
Yes.
Grant?
Yes.
Price?
No.
Van Workum?
Yes.
Markinen? Outman?
Yes.
Tisdale?
Yes.
Hoadley?
Yes.
Madam Chair, you have 9 yeas, 1 nay, 1 pass. HB 4055 supports the recommendation, substitute H1.
Thank you. I would like to put some cards on. Amanda Fisher with NFIB supports. Michigan Association of CPAs support. Michigan Retailers Association supports. Michigan Department of Treasury neutral. Toyota Motors North American support. Small Business Association of Michigan supports. Detroit Regional Chamber supports. Michigan Soft Drink Association supports. Michigan Association of Superintendents and Administration oppose. And Michigan Department of Treasury, again, is neutral. Representative Van Welcome makes a motion to excuse absent members. Without an objection, absent members are excused. There being no further business before this committee stands adjourned.